because people want to get into the market. And I also think that you've got this small window right now of where if you act and you know what you're doing and you're around the right people, you can get into the market.
Yeah, exactly.
100%.
You're a true OG in the real estate game and the podcast game. Have you been in real estate a decade or?
Yeah, so I first started investing back in 2008.
Okay, 2008.
Yeah,
wow,
yeah.
okay.
And the reason why I got into it, and again, was like, it wasn't like I wanted to be a landlord. What I realized was that I just like real estate so much because, you know, you look around here, it's brick, it's mortar,
you can touch it,
it's solid. They call it real estate because it's real. You can feel it, touch it, it's tangible. If it burns down, I have insurance, so rebuild it for me.
Right. Welcome to the Little Did You Know podcast. My name is Morgan Little. My guest today is Gary Hibbert, OG in the real estate and podcasting space. Going to drop nothing but gems. Stay tuned. Where were we? we jumped right into it before we even started.
About, like just a shift in the market. And, you know, that's been really the common theme for my whole investing career. It's always just pivoting and adapting. And I think a lot of times people get so caught up in, well, this is wrong, or like why are things changing? It's just always pivot and adapt. And I think the sooner that you're able to adapt to things, for sure, the easier it is, right? This will change as well too in the next year or two. Right.
So are you speaking as an investor, as a realtor in general?
As both, everything, right? And so we were saying earlier in regards to like one of the classes that we used to teach every month was a fast start training class for beginning investors.
Okay.
We're still, you know, doing events for the investors, but we're also shifting focus to help first-time home buyers or people just get into the market through like an affordability workshop. And it's been going well because people want to get into the market. And I also think that you've got this small window right now of where if you act and you know what you're doing and you're around the right people, you can get into the market.
Yeah, exactly.
100%.
There's a lot of, I think, just with people, there's this mentality, well, I'll never get in. You know, and that's it, final, and then they don't even look into it because they think that that's just the end all be all.
Right.
And that's not true, right? There are ways, there are things you can do to create a plan, take certain steps that will get, and maybe it'll take some time. Right. You know, maybe you're going to miss this small window, but there will be other windows. And so I think that's important to be able to show people that, right?
Yeah. And I think people get caught up in thinking that that first home has to be their forever home.
Exactly.
No, it doesn't have to be, and it probably shouldn't be.
Right.
Because what you really want to do is just get into the market. Get into the market, and one of the things I tell people, like, hey, I can show you how you can cut your mortgage payment in half. Wrong. No way, Gary. You can't show me how to do that. I'm telling you, I can.
Yeah.
And when we go through the class with them, they're like, holy shit.
Yeah.
Right. And really what that is house hacking.
Yes.
And house hacking into the market where you live upstairs, you can put somebody in the lower unit, or vice versa. If you want to even lower your expenses, where maybe you live in the lower unit and you have another family upstairs. Yeah. Right.
And I think a lot of people have this mentality around house hacking as like, oh, you know, like maybe if I was in my 20s, I would do that, or like, you know, because you can do it to an extreme and rent out rooms and stuff like that, you know, and I'm not in a place in my life where I want to have other people, strangers living in different rooms in my house. But I just mentioned we bought a primary residence. We're putting a kitchen in the basement and having my dad live there. So we are house hacking, you know, he's going to pay rent. So, and then we have that option as an investment property later. So I think it's important. Yeah. You gotta, like you said off camera or before we started, you have to pivot and adapt, right? Like this is what, if it's a dream of yours, or if it's a want that you want to get in the market, then do the things that will get you in the market. And to your point, it doesn't have to be a forever home. I don't know how many times I've said this. It's, you know, you're not going to get your dream home off the bat. And if you are, you probably stretched yourself too thin.
Yeah. 100%. I agree. Couldn't agree more.
Yeah. So you're a true OG in the real estate game and the podcast game. Have you been in real estate a decade or?
Yeah. So I first started investing back in 2008.
Okay. 2008.
Yeah.
Wow.
Yeah.
Okay.
And the reason why I got into it, and again, was like, it wasn't like I wanted to be a landlord. What I realized was that, and this is, I'll share a quick story with you, is that I was getting behind the eight ball, and I couldn't understand. I was working at TD Bank, and when I first started there, I was making like $25,000 a year.
Okay.
And as the years went on, I got up to like, I was getting like 70, 80. I'm like, why am I feel like I'm like making less? Why is there more month than money? I couldn't understand it. And anyways, this was the third time now I went into the bank, and I was in there to refinance, to take all my debt, put it in the mortgage.
Right.
And I'm like, man, this thing is the only thing that seems to be bailing me out of debt. And I remember sitting there. Have you ever gone to the financial advisor's office and they have like this huge chart in there? It's called the index chart,
right,
where it shows you what the stock market has done. It shows you what interest rates have done. And I looked on it and I saw inflation. I've seen that chart before, the line of inflation, but I didn't really get it or really comprehend it. But that day, for whatever reason, it kind of clicked on me. And anyways, my financial advisor left the office. She's like, listen, Gary, we're going to get rid of all your credit cards. We're going to slash your home equity line of credit. Not even slash, like just get rid of it. And I'm like, yeah, please do. Because I obviously don't know how to manage debt. I want, like, that day I was like, I'm only going to go cash. And she left, and I'm looking at this chart and I see the inflation and I'm like, that's interesting. So any year it could be 2 or 3%, it could go up to like a 15, 16%. But if you average it out, you know, over a 50-year window, 5% is kind of maybe what that number looks like, or 4%. And when I took a look at what my raise was the previous year, I made like $1,000. Not bad. But then when you do the math on your income, it worked out to like 1.3 or 1.4%. And I'm like, oh, I get it.
Yeah.
I can't outpace inflation.
Right.
I can't even outpace inflation if inflation's doing 2%. And I'm like, what if I had one more property? How would that change my life? And that was really the start of it, realizing I cannot outpace inflation. Now everybody knows about inflation. How are you going to outpace inflation at 6% or 7%?
Right.
So then you have to put yourself into a vehicle that can outpace it or can stay ahead of that. That's what you got to do, that. And then also finding things that create additional streams of income, cash flow. Right. And that's what got me down the path.
Yeah, I think that's important because I think people are probably paying attention more now to inflation than they have in a long time.
Yep.
Everyone's talking about it, and it's higher than it's been in a long time. So I think that's an important thing to point out is you know, how some people think they can't get in the market, but maybe let's look at how can we get in? Let's find a way.
Yeah.
Because otherwise you're always going to feel like you're behind that 8 ball. And I think people are feeling that more than ever.
Yeah.
So I think that's a really good, important point.
Yeah. And listen, the other thing too, just to add to that, is that let's say you want to be in Toronto. I wanted to. I was in Toronto at one point in time. We had a condo. Right. And then we were looking because our family was growing. We're like, okay, we need to get like a house now with a little bit more space.
Yep.
We couldn't afford Toronto.
Yeah.
In Toronto too, we're like going for like $250 back then,
right?
And we had to go to at the time Ajax,
okay,
and we bought a townhouse out there for like $160K. Wow! But that's all we could afford at the time. Yeah. And so it's okay to move a little further out to get into the market,
for sure.
And then you can, you know, maybe potentially move back in, but just get into the market. I think it's important.
Yeah, I'm curious your thoughts. So yeah, that's a perfect, you know, kind of map to say, let's start here. And then if the goal is like, you know, some people just have that goal. I need to have that place in Toronto, in Leslieville, in Rosedale, whatever the case may be.
Yep.
Do you think it's worth living in Toronto? You know, like buying a home, because it's not an investment.
Buying a home in Toronto.
To add to that, sorry, just kind of as a second part, I'm curious to hear your thoughts on a home, a principal residence, as an investment. There's the whole thing where it's a liability versus, you know, an asset.
Yeah. I mean, you know, yes and no.
Yeah.
Yes and no.
Depends.
I mean, you know, if you read Rich Dad Poor Dad, Robert Kiyosaki, he says it's a liability. Right. It took me a while to kind of figure it out, but really it was that because your primary resident is taking money out of your pocket. Like if you stop paying, or sorry, if you lose your job, how long will it take for the bank to come take your home?
Right.
But if you have an investment property and you've got tenants in there, and you lose your job, well, they're not going to take your investment property because your tenants are continue to keep paying.
Right.
If they continue to keep paying, right? And I think the other question was like, you know, buying a home in Toronto. I think with the recent changes in the bylaws in Bill 23 and being able to put 3, 4, even up to 5 units in your property, that you're talking about an asset there for sure.
For sure.
Because now you've got you've got people paying that mortgage along with you as well too, and that again may not be your forever home where you can now move into another property. Maybe do that 2 or 3 times before you buy your dream home.
Absolutely. Yeah. And I think even for those people who, like yourself, you're like, okay, we need some more space, you know, this is, so, you know, buying that first home, I don't want to discourage people from thinking, oh, if I buy a home, I'm taking on a liability is going to take all my cash. Right now, you're spending, you know, $3,000 a month in rent. That $3,000 could go towards a mortgage.
Yeah.
And, you know, I think it's important to have an overall vision and a goal. And if you want to go the route of getting that extra property to help, you know, curb that inflation a bit, you know, have that plan going forward. Do something like I mentioned, you know, have a second unit, create a second unit that becomes an investment property. It allows you to at least build some equity, right? And you can then buy investment properties.
I think people get so caught up in that short-term window of, well, where's the market going to be a year from now or two? Yep. Don't even think about it that year. Real estate is a long-term play.
Yep.
Where do you think it'll be 10 years from now? Take a look at the external factors. Take a look at what's happening with immigration. Take a look at Toronto being a world-class city now where people are coming here. Look at it from that standpoint and say, where else should you put your money?
Right.
What else can you do to, again, create that wealth factor that will allow you to outpace inflation? That's the biggest force that is against a lot of people is inflation and the printing of money and not understanding the history of money, which I think is an important thing as well too to pay attention to. Where I actually went back to the Roman Empire times and took a look at okay, here's something interesting. So take a look at this, and when you get like into gold and all that, and you go back to Roman Empire times, if you had like an ounce of gold, it could buy you a toga, your outfit, sandals, and a nice haircut.
Nice.
Okay. You get now into 1971 when Richard Nixon took us off the gold standard, and the gold then was what, 360, 370 an ounce, something like that. But that'll buy you a nice suit, nice pair of shoes, and a haircut.
Right.
What's gold today? $2,000, $1,900.
Yeah.
I can get you a nice suit, nice pair of shoes, and a haircut.
Right.
So then what's changing?
Yeah.
Okay. So then that's why you want to be in assets and understand that money printing is devaluing that paper in your hand. Right. The real value isn't in that paper; it's in assets.
And even in gold, like gold is just a hedge, right? Like that's
it is.
That's all it is, really. Like you're not gaining any real value or wealth,
Correct.
as you just demonstrated.
Yeah, exactly. It is a hedge.
Yeah,
it's a hedge against printing money.
Yeah, right? Which is And are you into crypto at all?
I've gotten into it.
Yeah.
I mean, I'm doing a little bit of it. I'm still learning about it. Yeah. It definitely seems to be something that is going to be a force against, again, the printing of money. Yeah. There's still a lot of confidence in the U.S. dollar, but you're starting to see it slip a bit. Yeah. You know, and when inflation takes off the way it has, people start second guessing, like, is this what I want to do? And then you got the BRICS now as well too out there, and so there's a lot of different moving pieces. So for me, I'm big on diversifying, but diversifying in an asset class that I understand. Of course. As opposed to a large spectrum of things that I don't understand. Right. So what I mean by that is I'm still in real estate. I've purchased properties here in Ontario. I've purchased properties in Mexico. I'm looking now in the U.S. So I'm diversifying in asset classes that I understand. I used to do stock markets. I used to do commodity trading. Right. I used to sell currencies and man, I got wiped out on it. Yeah. And it was just because I just didn't understand, it probably. And I'm not against it. I'm just, I invest in things that I know and understand. I think there's something there for crypto. I just don't know and understand it properly yet. But you know, I can see us definitely going to some type of a digital currency. I don't think it's far-fetched by any means. And I do like the fact that there's only a certain amount of it as well too. Right. Well, what's the date? When's the halving is like? Coming up very soon, I think. Remember. It is it's in April, but I'm not that into it as well. But I've definitely bought in. It's another thing. I know a limited amount about it, but it's one of those things. It's like buying an index fund. Like just buy in, dollar cost average, and I just like real estate so much because, you look around here, it's brick, it's mortar, you can touch it. It's solid. They call it real estate because it's real. You can feel it, touch it. It's tangible. If it burns down, I have insurance, so rebuild it for me. Right. So, sure. You look around, like go to Europe. I mean, those things have been around for years and decades and hundreds of years and centuries. And those things have been passed down from generation to generation to family. And that actually brings up an interesting point as well, too, is that, I think here, why I think there's so much anger. And I get the anger from a tenant standpoint, because it does feel like it's unfair. But I think this generation is going through this transition of not potentially being able to own a home because of how fast these prices have gone up. Here's a great example. You wouldn't go to Manhattan and say, this is unfair. Why can't I buy a condo in Manhattan? You'd be like, oh, I missed the boat.
Right. Yeah.
And so I think the next generation after this, if you want to live in that Toronto area, you'll be like, oh, how lucky you were to buy a home in Toronto. I just missed the boat. Yeah. They won't be as angry because that's just the way it is. Right. But when you're going through that transition period, you're like, this is unfair. Because you're getting priced out.
Yeah. And I mean, there's nothing holding you to Toronto, right? Like there's a lot of world out there. There's a lot of Canada out there.
Right.
You mentioned Ontario. Are you still investing, acquiring in Ontario?
We're moving into the U.S.
Yeah. I've seen that.
Not to say that I won't continue to buy here in Ontario, but I'm putting more focus into the U.S. and larger buildings, like the apartment building space. I think that's kind of the route that I want to go in. And I've partnered, I think, with some incredible real estate investors out there and mortgage agents who understand it very well. And I'm really big on partnering with people who complement me. Right. And so people that have a different strength than I have, that we can come together, and I have a different strength than they have, and moving forward and partnerships. I think when I take a look back at my career, everything that I've really done has been either through a joint venture or some form of a partnership, whether it be the brokers that I'm a part of, or Smart Home Choice, the investment company that I have, or the private investing company that I have, or the investment properties that I've purchased. There's always some form of a partnership. And I think if you understand the art of partnership, joint ventures, raising capital, you can get to the point of not having to worry about money again.
Right.
And as opposed to trying to do it on your own, doing it with other people. But partnerships and joint ventures is about relationship. Right. And it's not just about chasing money. And I made that mistake in the beginning. Like, okay, I got a partner in front of me, so now I got to sell this deal. No, that's the wrong way to do it. Right. I made that mistake for the first year. I'm like, oh, I don't sell the deal, I sell myself. Right. Yep, very true. Yeah, and if I sell myself, and then I also know what I'm looking for in a partner, that can take you very far. Yeah, agreed. That's great. I think that's great advice, and I think something severely overlooked, especially with, people may have the tendency, especially after the stuff we just talked about, to want to rush in and like, okay, well, now I need to invest in real estate. It's like you said, currency trading and all these other things, you can't just rush in and start doing it. You're gonna lose your shirt until you understand. And one of the best ways to understand is to partner with people who are already doing what you're doing, or as you mentioned, can complement what you're doing, and together you're an even stronger force. Yeah. So yeah, very true. In the what parts of the U.S. are you looking at? Cleveland, Ohio. Right. Yeah, it's a popular spot now. Yeah. So we're looking down in that particular area right now. That's cool. And so you've had some trips down, done some walkthroughs and stuff like that? We actually did a little trip down there about a month ago, 6 weeks ago. Okay. Went and checked it out. Walked them a couple different apartment buildings. We got a really good realtor down there as well too. Very experienced and knowledgeable. And we took a look at all kinds of different apartment buildings in different locations, and learned the areas that are good, the areas that are not so good, but then the differences between them. And not to say that one is better than the other, but just understanding what's your appetite, right? What makes sense, maybe. And exactly, right. Okay, and so it sounds like you're doing it the right way. Take a look, get boots on the ground, see what's happening there before just jumping in again. Are you looking at setting up like the structure and everything? Yeah, like kind the of whole GP, LP structure. Yeah. Exactly. Okay, cool. I get the lawyers and the accountants and all the people that are a little bit smarter than me to help me get that all set up right. That's it, man. There's no point in trying to learn everything and do everything yourself. Yeah. It'll take you a lot more time. 100%. Yeah. You mentioned Mexico as well. Yep. I remember hearing your story about your place in Mexico. So I'd love for you to share a bit about that. Yeah. So we picked that property up in 2021. And one of the reasons why we did, if you kind of go back during the whole COVID thing, I hated the lockdown.
Yeah.
And I just didn't want to feel locked down ever again. And like, okay, so how do I create a plan or a strategy so that I can be able to move to different parts of the world if I want to or need to?
Yeah.
And so my wife sat down, and every morning we had our coffee, and we looked at different places. We were looking at Costa Rica, and we took a look at Playa del Carmen, and we kind of really fell in love with Playa del Carmen. And I'd been there a couple times. She hadn't, and then we jumped on a plane, went out there, checked it out.
Nice.
And I'm more of like I'll jump in.
Yeah.
And she is more of the, hold on a second, dot her I's, cross her T's, which is good in
compliments.
business. Yeah,
compliments, right?
Exactly. And she got back. He's like, I want that place.
Nice.
And I reached out to my accountant, like, how do we get this place?
Yeah.
Like, let's figure this thing out. And so anyway, so we bought it, and we're Airbnb-ing it, and we go down there and use it from time to time. But the cool thing that we did with that property, we got a 3-bedroom condo.
Right.
We were also thinking of like our kids as well too. So, being able to live there, and if they wanted to come down as well too and spend time with us. But we turned it into a 2-unit. So we actually put another door in the hallway, and we put like a lock off inside the unit. And so now you've got either a full 3-bedroom condo, or you can have a 1-bedroom with a full kitchen, or the other one would be more like a hotel with like a,
so not
like
a
a small
kitchen.
little like, a small little like a fridge and coffee maker, and it still has like a bedroom, bathroom, and the other 3rd bedroom has like a sofa bed where it's like a little living room, but also another bedroom if you want as well too.
Yeah, and that's it, man. Like just creating that versatility. It's like we talk about multiple exits often, and just having multiple use within one. That's great. I love it.
Yeah, and why we really like that location as well too is that it was like almost like a home away from home, where I love the fact that I can go to Walmart, I can go to Home Depot. They've had thousands of restaurants. You cannot go to all the restaurants. It's just impossible. You just walk down the street and like boom, there's like 6 more restaurants there, and they're amazing. And you could have like a $2 taco, or you can go get like $150 steak. I love it. I don't know if you've been there, but
I've actually never. I've been all across Central and South America. I've never been to Mexico, which is I don't know how I managed that.
Well, you got to come down because we do property tours down there as well too, right? So just kind of creating like our own little community down there.
That's great. I know like a handful of people who have just moved to Mexico as well. Just same sort of thing, like want somewhere away from home that they can. And so Mexico seems to be I mean, it's Mexico, right?
I think COVID kind of made a lot of people make some big decisions.
For sure.
I'm done with this.
Yeah.
I want to, go somewhere else and have a little bit more freedom.
Yeah.
And I know, I mean, some people have come back, but I know a lot of people where they're like, this is it, man. I'm good. I'm staying here.
And then some people have stayed here and continued to complain. But whatever works for you.
Exactly. Whatever floats your boat, right?
Yeah. So you've been podcasting for how long?
It's been like 7 years now.
That's amazing. So that's before podcasting was cool.
Yeah.
Right? Like, so what prompted you to start a podcast?
I got to this point of thinking that I knew enough now that I was like, okay, I'm going to have to start a podcast. I'm going to start teaching people. Now we're looking back and reflecting on it. That podcast has taught me way more than I've taught people. Yeah. It's probably one of the best things that I've ever done. When I first started off, I was only doing it monthly because I was actually doing all the editing. Right. I was cutting out all the ums and the ahs, and then posting on social media or iTunes and all that. And then I think about maybe a year and a half or 2 years later, I'm like, I like this. Yeah. And so then I went to weekly. And then when I went weekly, then I was like, okay, I got to get somebody to help me. And so then I got like a producer and somebody to kind of create like the little small teaser clips and just kind of help me put it together. And I'm still loving it. I still enjoy it. And I think for people getting into it, I would recommend doing it maybe monthly at first. Right. Seeing if you like it, because it is a job. Yeah. It really is. Don't think that it's not a job. Yeah. It's not just like something you just do on the side. There's work involved and there's cost involved. For sure. And but if it's something that you're really passionate about, just try it out first, see if you like it, and then jump full force into it. But I love it.
Yeah. Well, I mean, it's the top 0.0001% that's had a podcast run for that long, like most people, like you said, jump in, maybe make a couple episodes and then that's it. Right. So it's like anything, you gotta stick with it.
Yeah.
So
yeah, you got to find the topics.
Yeah.
You got to have something to talk about. You got to find the guests.
Got to book guests. Coordinate. Yeah, exactly. It is a lot, and have the space, and then coordinate the space availability with the guest availability, and there's a lot that goes into it. But
consistency.
Yeah, exactly. But I think it's it seems like you had a lot of forethought to even think to start it in the first place. Cool. But then to be like, okay, you know what, we can do more. We can start clipping it up. We can put it on social media. Because like now everyone's doing it, right? Like I was doing it before this too, like I mentioned before it was cool as well.
Right.
But now, everyone's trying to do it. So, but it's just like, I'm impressed that you were able to think, okay, look, we can clip this up, use more of it. It's like, it wasn't that everyone was doing it and you're like, okay, I can see this would work. You had that foresight to, be able to create content out of it.
Yeah. And the one thing that I thought of too, when I started, I was like, I didn't know where it was going to go. And I didn't want to pigeonhole myself into just real estate. And so it was like, it's wealth, health, and everything in between.
Yeah, I like that.
And the reason why was just like, I'm going to evolve. Yeah. Like everything else that I've seen and touched and do, it's always some form of an evolution. And I was like, okay, I want to make sure that I can only talk about real estate. I want to be able to talk 100%. About mindset. I want to talk about health. I want to talk about lifestyle. I want to talk about working with your partner and like overcoming that. Like Absolutely. I just want to talk about everything.
Yeah, no, that's great. And that's exactly what I'm aiming to do with this as well. There's a lot of real estate podcasts out there, realtors watching realtors talk. Yeah. And I was trying to not have that exactly. I want to be able to, the first part of our conversation, I want an end user, a consumer, to be able to listen to that and get some value, right?
Yeah, absolutely. And
then be able to talk about, personal growth, health, all that stuff as well. So, so I'm glad to see that it's a success story. I
don't know if it's a success story, but it's definitely a fun story.
Yeah,
I'm having fun with it.
Yeah.
And I think that's really what it comes down to, is whatever you decide to do, like just see if you can find a fun element and make sure that there's a passion behind it as well too, because then if you don't, it'll feel like a chore, and that causes stress.
Yeah. Right? Very true.
Yeah.
So what's next? What's the future hold for Gary?
What is next? Well, I think for me, it's moving into that apartment building space, and gonna have it'll be, I think, a bit of a challenging journey, but I'm definitely interested to see where that goes. I want to continue to grow and build the brokers that we have. So we have about 170 agents there. So that's pretty exciting. We just did like an award ceremony this week, and it's just amazing to kind of see the realtors all in the room and getting their awards. And I just love helping other people. Like I think when I look at everything that I've done, I really enjoy that part of it. But it takes energy, it takes time, and I think that's one of the reasons why me and my wife created that mini retirement.
Right.
We take July and August off, and then we take December and January off. And I think what that does is it, you get to this point of being burnt out and then like, okay, but I know I'm almost there. Yeah. And I can take that break again and relax. And I let everybody know. See you guys later. Bye. Now it's not to say that you can get a hold of me during those 2 months.
Right.
It's just that's the best way I've found how to incorporate the 4-hour work week. Because that 4-hour work week doesn't exist.
Yeah.
I don't care what you tell me, it doesn't exist. Yeah. But during those summer months, I figured out, okay, I can do about a 4 to maybe 6-hour work week where I'm still getting back to people. But the interesting thing is that when I've done that and slowed it down and I let people know, they actually do appreciate that and actually say, okay, we'll give Gary a little bit of a break. But I still have my team. Yeah, my team is still there. They're still working.
Well, that's the beauty of a team.
Yeah, but I also still allow them to take some time off as well too, because I think it's important.
For sure.
Because guess what? When we get right back into it again, then you're hungry again.
Yeah,
it's and then you don't have to worry about, well, I can't wait till I'm 65 to retire. Yeah. So we're doing these little mini retirements every year. And then what else is next for me? Continuing on with the private investing company that I've got as well too, and then just continuing to help people. Yeah, I like that part of it.
Great,
I really do.
And I think by doing what you've done, which is kind of designed a lifestyle that works for you, it enables you to help more people. Yeah, you're not just running around with the chicken with his head cut off and getting burnt out. Right. You create space to allow yourself to do what you love, which is like you said, helping people. So
yeah. And also, I guess one last thing is getting out of real estate transactions.
Right.
and having my team do that for
Yeah.
me now.
Right.
Like I've had fun with it. I will probably still do a few transactions.
Sure.
Because some clients are like, no, Gary,
Yeah.
only you.
Yeah.
But if you look at my social media page, some people are like, I didn't even know you were a realtor.
Yeah.
I don't even really push it that hard, but I'm a realtor.
Yes. Yes. That's great, man. Good for you. And so is it are you a broker then?
I'm not the broker record. We do have a broker record.
Right.
I'm an owner.
You're an owner. Okay.
Yeah.
Great.
So there's 3 of us that own our neighborhood realty.
Awesome.
Yeah.
Good for you, man. Well,
Thank you.
Again, I appreciate you coming out, man. I know you're just a wealth of knowledge based on just your experience in real estate, in investing, in podcasting. So I was happy to be able to pick your brain today.
Thank you.
Thank you, man. I appreciate it.
Yeah, thanks.
Right.
I'm a wealth of knowledge because of all the mistakes that I've made.
Absolutely,
I just keep
yeah.
making them. Yeah, I keep making them every single day, every single week.
Yeah.
Yeah, I'm a failure.
What were some of the biggest mistakes that you can just kind of rattle off that?
The biggest mistakes. The biggest mistakes is because I would say sometimes going against what my wife says.
Okay, there you go.
And then jumping in, and I'm like, damn it, she was right.
Yeah.
And that would be with real estate transactions, like, and some of the investment properties that we bought.
Yeah.
Not really maybe say picking the right locations or the right strategy at the right time.
Picking the right partners.
But always at least being able to then get in and correct it. So I've been able to correct it along the way, but and then, sometimes just not proper screening.
Yeah.
I've had some, unfortunately terrible tenants.
Yeah.
But that has also allowed me to grow.
Yeah.
And
exactly.
and so when you're doing something and you're successful, you don't learn from that. But when you're doing something and you fail, that's where your biggest lessons come from and your biggest success. So the more failures I've had, the more success I've had because of those failures.
Bam. That's it. Mic drop. We'll leave you with that. Thank you, man. Appreciate it.
Awesome. No problem, brother. Thank you.
That was the Little Did You Know podcast. Big shout out to Gary Hibbert for joining us today. I'm going to link his podcast and all his links down below. Let's get it.